Asset management is a weird space these days. How do you prove to the market that you offer something above ETFs?
The reason why you would want to have someone else manage your money is to access opportunities you can't. You also manage the risk for the client. You look at S&P and it's starting to look like the Nasdaq. And the top names so tech heavy weighted. Maybe you want a little less risk than that, right?
Just to summarize then, is that diversification and a little bit different management of the fund's proposition of asset management?
These days, that's basically the whole point of private asset management. The actual fund itself, you can access those kind of funds elsewhere, or
Mm.
at least there's ETFs versions of most private funds. But it's the whole point of asset management these days is wealth planning, tax planning, extra planning.
It's starting to change a little too. Active is starting to become a little less criticized just because the problem with passive is they're so slow.
Mm.
And if you think about who's driving the market, right now it's just a few large hedge funds and they're the ones who move the market because passive follows them. So if you think about it, these large hedge funds who basically determine these trends, their impact is magnified on the market because there's no other big players. And
Yeah,
that's how some of them are able to outperform year after year. The people who create these trends, who start these trends, are the large hedge funds. Right?
yeah.
So you think momentum, right? The person to start the initial trade are these hedge funds. The whole value thing, people knew about it for like 6, 7 months ago. Like, and then the whole oil trade, it's the same thing. Like, people knew about it 6, 7 months ago, and then people were loading up a long time ago. And it's like after it picks up enough, the passive funds start following these trends and stuff. They now have a pretty outsized influence on the market. If everything was passive, nothing would change. Right? Where you have very little swings in the market. Who basically direct the market now have even more power than they did before. Because, like, say before you would have 100 different hedge funds, right? You'd have like 100 different opinions and they'd be betting against each other. Now we have like 25 hedge funds. Five of them get together and say, no, value's the play now. We're all going to buy value. You're going to see a sudden spike in value, and then passive is just going to follow it. So now they control so much more of the market and the direction of the market, right? If five of these funds just decide tomorrow S&P is too expensive, we're just going to sell. Well, guess what? That's going to trigger selling for all the passive stuff. Like I'm talking sector specific, right? Like if you're talking SPY in general, it's going to depend on how much money is actually going in.